of the London Session Open. Today is August 1st, 2019, and my name is Alejandro Zambrano, Chief Market Strategist with ATFX. Let's take a look at the markets. It was a very interesting day yesterday. It had some volatile events in, obviously, because of the Fed rate meeting. So we're going to talk a bit about that. So I know the chat is not really working today, but you can just click up here and just put any questions or anything you want here. Obviously, if you don't have any questions, it's always nice if you just want to say something like good morning. And that's always nice. Good. So let's begin. So we're going to talk a bit about the markets. And we're going to begin with the euro versus the USD. So this is your euro, right? And if we just get rid of everything for a few minutes, you can see how the market traded strongly lower yesterday, and that was on the back of the Fed rate meeting. And then you had further selling today, and I think that's mostly because, well, that event happened in Asia overnight. You can see at the dollar yen, it rose at around 1 p.m. and at the same time it slid down lower here. So people buying dollars, and that's sort of affecting things lower here. But it's not really the optimal spot to short sell. As you might remember, I said that the market is in some sort of descending triangle, and I said a break to the 1105 level, that would have been the sweet spot to short sell. Either when the meeting was happening or maybe by the end, so when the market sort of closed around 110.72. Now, going forward, as long as you trade below the high of yesterday, we will be outside of this descending triangle, and it does suggest that we can trade lower. Suggests we can trade to as low as something like 108, 107.85. We have, of course, short-term support on the way down there. You got with 110.15 level, and then you have all these psychological levels on the way down lower. So I think we can go down. I'm not sure if we're going to go all the way down to the target, but definitely lower. That's the way things are looking right now. And the reason for this is because the Federal Reserve themselves and Chairman Powell, he said that this is an adjustment, like a mid-cycle adjustment. So it's not necessarily the beginning of a series of cuts. And as you know, the market has been projecting cuts, and it's still projecting cuts. It's projecting 2 more cuts before the end of the year. But we saw a big reaction in the currency because of this. And for now, you know, let's just treat this as bearish. You just need to understand that we have non-farm payrolls coming up on Friday, and we have some indicators like the market PMIs that does suggest that the economy slowed down significantly, so we should see some damage to the labor market as well. But I guess as long as the labor market sort of produces maybe 150,000 jobs and doesn't underperform heavily by doing like 25 or 50K outcomes or even negative, then this will continue to be lower for now at least. Now, today, Europeans, of course, are buying a bit. You can see this on the chart here. And the reason for the buying is that the market has slid quite strongly from yesterday's level. And the risk-reward ratio to sell at these levels is not good. If you short sell here, because the last major high is up here, you would need to have about 117 pip stop loss. And then, yeah, of course, if you think we're going to trade much lower, then, yeah, just short, because you'll have your risk-reward ratio. But for the short-term trader, I think they're waiting for a bit of a pullback. And that's what we're seeing here. The market is trying to stabilize. Now, we could put some fibs on this. So if we put a fib from the very high to the current low, you get these 3 different levels. And I think realistically, around 110.80 or so, people will start to short sell, and they might continue to short sell. And obviously, the best entry would be just if we would just go up and quickly touch that level and then spike lower. So around 111.05 would be, I guess, the best entry. And then we would just look for this to trade lower. So I am bearish. The market is bearish. The Federal Reserve were not as dovish as everyone projected. And I think from up here, people are probably going to short sell. Now, this is the GBP versus the USD. And it's also been dragged lower because of the situation. But again, the risk-reward ratio for short selling pound sterling down here at these levels is not there. Remember, a few days ago, actually a few weeks ago, I already looked to sell when we were around 124.80. I said that a few times, and then we had that big slide. And if you did short here, I think it's an excellent opportunity to book half of the position, if not the whole position. We still have more pain ahead, I think. We have the pattern target here at 119.24 or 47. which we talked about already when we started to trade below here. And I think in the long run, we can still trade much, much lower. That would not be unsurprising. In fact, the pound is probably going to continue to slide until October 31st, or before that, maybe, if we have some clarity, which again is very, very, very unlikely. So, Fib-wise, from the very high to the very low, where I think the market would short sell. So obviously, the market did not have enough energy to go all the way up because of the Fed rate meeting, and maybe this is now going to be the next highs and limitations here. But I think in general, we should stick to these levels for now. So look at 123, between 123 and 124. I think that's sort of the sweet spot where people might short sell again. Dollar versus the Japanese yen. So we talked about this one as well. So it didn't really react too much on the rate meeting. It did try to break up higher, but then quickly pulled back. But I guess that people were looking at this in the Asian session and said, okay, this will probably break out higher eventually. And we did. We're now above 109. And as you can see here, that opened up for residual ratio trade of 1.5, maybe a bit more. And not only that, we trigger what looks a bit like a ascending triangle to some extent. I'm not very confident in this pattern because at the same time stock markets have declined quite a bit. But above the July 26th low at 108.39, above that level, the trend will be bullish. We're now in the process of revisiting that breakout point. We might slide a bit more, maybe down to, I would say maybe a 108.70 or so. But I think down here and possibly already at the breakout point, people are going to start to accumulate dollar yens. As for stock markets, they had a relatively strong decline, and unfortunately they did slide below that trend defining level. Obviously, ahead of these events, it's always good if you're trading short term to close down any reduce risk really around these events. And I know you miss out, so the only time I would keep a position open if you have a nice floating gain to speculate with. Imagine, for example, just for the sake of it, you bought down here somewhere, and then you have this gain here, and the market's up here, and you have this like a buffer, and then you say, okay, I'm going to speculate with my profit here, so I'm going to keep this one open. And then, obviously, if it goes back down, you still have a bit of profit, or as a minimum, you back up break even. That's what I would have done. And here specifically yesterday, I was holding a position, but it wasn't linked to the dollar directly, and it wasn't a stock market. So thankfully, I managed to avoid all the crazy moves yesterday. Now, if you look at this today, the market is trading sideways, okay, and slid below support. It's looking rather weak. The Dow Jones is looking rather weak. The Nasdaq is looking rather weak. The CAC 40 already turned bearish about 2-3 days ago, and the German DAX is already bearish. So there is hints that we might be creating some sort of a high here. And I think if we do trade below 29.58, if we do that again, then we're probably going to start to trade lower. So how low can we go then? Well, we have a major low here in the beginning of June at 27.29. If you take fibs from the level all the way to the high, you get these three levels. And I think maybe from maybe 2,900 or so, people might start to rebuild, but they might possibly rebuild at much lower levels than maybe 2,800. Because I'm thinking here, it's going to be a very, very fine balance. So they cut once, that boosts the stock markets. But traditionally and usually, they tend to cut too little and too late. Now we haven't seen that deterioration in the data yet. You only see it in the leading indicators like the PMIs and the ISMs, but we haven't seen the labor market, have too much weakness. And not even, I think, initial jobless claims have been too weak. And then you have other things that sort of bounce back. And if you look at the economic surprise index, which is an indicator that shows you if the economic data is beating expectations or missing expectations, well, that indicator shows that US data will probably outperform going forward. So from that perspective, if the data outperforms, we might go higher eventually, but not necessarily sure if we're going to do this from this level here. There's a lot of, the market is very, very reluctant to push the price higher from these levels. And again, in CAC 40 and the German DAX is already bearish, so maybe that's going to drag things down here. So what would I do here? There's three options you can do. You can either, if you're just scalping and doing things like and trading short term, we're within that range still. So I think we could go up halfway maybe, and you could potentially scalp that little range if you wanted to. The alternative would be buy on that breakout, which is probably not going to happen, or buy at the lows here. And obviously there's that fourth setup, which is just to short sell on the break here. Not really my cup of tea to short stock markets because it's rather difficult. 70% of all years the stock market trades higher, and the risk reward ratio is not really there most of the time. So I'm not a big fan of shorting stocks. But yeah, that will be the fourth option. So again, trading within the range, buying now, stop losses just goes below. The alternative, break the low, switch and turn bearish. Alternatively, just wait for it to dip here and buy at low levels, so buy the breakout. As for the German DAX, is doing what I think the S&P might do. So here, the short-term trend already failed when the market slid below the July 18th low of 12,194, all right? And fib-wise, from the low to the high, you can see we corrected 50% of the move. But look, given the way fragile US stock markets look, what happens if US stock markets trade lower with a few percent? Well, you probably find your German DAX here at 11,836. So that could be something that definitely something to pay attention to. So I think probably up a bit, but then probably lower again. Crude oil is just trading within that range, right? So it's within that triangle, and right now I don't think it's going to offer us any good opportunities. It will continue to trade sideways here and will probably continue to do so for a few more weeks. Finally, these are gold prices. So gold prices, as you know, I was looking for a break to this high, so 1433, 1434. Obviously, you don't take an position just ahead of the event. That wouldn't have been too clever. So what happened here is that the market went up and then it slid lower. My stance, as I mentioned to you guys yesterday, was that I think that the Fed was just going to cut with 25 basis points, whereas the market, about a fifth of them, were anticipating a 50 basis points rate cut. So obviously they didn't deliver that rate cut. They didn't deliver that 50 basis points rate cut, and that caused gold to go lower and the dollar to strengthen. Now, the way this has slid here, it doesn't show that is the beginning of a major decline. It's just slowly shrinking lower, so someone is buying as we're heading to these lower levels. I personally think, looking at this today, that we'll probably should treat the 1381 level and treat the 1381 to 1447 level or interval as a range. So we'll treat that as a range, and we can revisit the lows, and maybe down here, depending on what's going on, we might be able to buy some. But it's a range, and yes, it might trade much higher. We still have all these different patterns, but this is a range for now. Okay, so that covers most of today's, or most of the main markets. Let's see if you guys have any questions. So we have Tim in the chat. Good morning to you, sir. And we have as well Anjay. Anybody else? Just put questions here if you have anyone. And as well, all you guys that are watching, I see a lot of you guys watching. Don't forget to hit that like button, and don't forget to subscribe. So when you subscribe like this, if you click on that little bell button, you actually get a notification, much like this one up here. So this is my personal account. So you can see here, every time I go live, I can see you get that little notification. You can also even get emails. It can be a bit annoying, but you can always disable them. There's a lot of different things you can do. So subscribe to us. Is there anything coming up today? Let's take a look at the economic calendar here at Investing Cube. How can I forget? Bank of England rate meeting. You know, guys, I haven't paid attention to the Bank of England rate meeting for quite some time. You know, people do like to get hyped up about it, and you can definitely have some moves. But Mark Carney is not going to do anything. He is just keeping things the way they are, and maybe will react after Brexit. If even he's around at that time. I don't even remember when they're supposed to replace him. But they have very, very limited I mean, they have all the resources they want, right? But they're just keeping their powder dry. The labor market in the UK is low. Inflation, as far as I can remember, is relatively good. So maybe if we didn't have nothing going on, no Brexit, then maybe they would have done some interest rates hikes potentially, but I don't think so. But maybe. But the problem here was happening is that there's very little new investment into the country happening right now, and that will create effects later on, and that's really where they're holding off. And the reason for not people doing investments is, is because of Brexit. So this could easily create some volatility. But what are they going to say? Are they going to say, okay, we're going to align ourselves and cut interest rates with everybody else? I really hope they don't, because last time I checked, inflation was relatively high, and I would prefer if they can keep it like that. Just immediately after Brexit, we had about a 3% inflation or so, and already now I can tell you, just like food-wise, because I think about 50% of all the food or so is imported from the EU. So vegetables and fruits in particular. So just getting yourself a decent lunch nowadays, you literally pay twice the price you used to pay. Well, not twice, but almost twice the price than you did before 2016. Okay, so we're gonna wrap things up. So we have that coming up. Market PMI, but that's the fine. That's the new that's the second update. So the market PMI, you can see here's a 50 for the manufacturing sector. It's just been sliding. And then you have the ISM, which is, people pay a lot of attention to the ISM, even though the ISM indicator tends to exaggerate the moves. And I think it's just because of a legacy thing. The fact that ISM manufacturing has been around for at least since the 70s, if not even before that. But it tends to exaggerate, when we have good times, and also when it goes down quite excessively. So I don't really like it too much, but people definitely pay attention to it. So the last reading was for a reading of 51.7, and the next forecast here is for it to improve a tiny bit to 51.9. I'm seeing some estimations by some banks, and they literally predict we're gonna go below 50. And of course, if we go below 50, you'll have your Eurodollar go upwards. You probably have gold go up again, but then that will settle. And as long as we don't take out, in the case of the EURUSD, as long as we don't take out that high, then it's likely that we'll continue to drift lower. All right, guys, thanks so much for watching. If you have any questions, you're most welcome to reach out to me. You have me via email at alejandro.zambrano@atfx.com. As well, you have me on Twitter at alexfx00, and as well on WhatsApp. So if you have any questions, ping me, and I'll do my best to try to help you. Have a great day, and don't forget to share and like the video. Thank you, and bye-bye.